We're back, and it's time for Ask Annex. As always, got a question for us, please head to the website, annexwealth.com. Look for the Ask tab. I'm Danny Clayton. Matt Morzy is Director of Research and a CFP at Annex Wealth Management, part of the Annex Wealth Management investment team. He is here. Hey, Matt.
Hey, Danny.
Let's look at Fred Coleman, Wealth Manager and CFP at Annex Wealth Management. Welcome back.
Thank you, Danny.
Question 1. Now that Trump has announced tariffs on Canada, Mexico, and China, what does that mean for me or my portfolio? And obviously the situation changed a little bit since this person submitted the question.
You know, that shows how fast the markets move and how fast we can move politically as well, too. So after the question came in, you know, tariffs were announced, the question came in, the market sold off pretty hard to start off Monday. And then, you know, Trump was on the phone and started having more conversations with, you know, Canada and Mexico. And we saw things got pushed back a month, and, you know, you could start to see the market rebounded after that, after, you know, going down right away to start off the day. And I think that's the most important thing to take out of any of this, especially from a portfolio perspective, is that the markets move really, really fast. We saw that a week prior, you know, with the news about AI and what was coming out of China as well, too, that the market tends to react first and then takes a step back, thinks about it, and a lot of times it rebounds or goes the other way afterwards. So for you and your portfolio, the most important thing is having a plan, knowing what the allocation is that you want, and having different probabilities assigned to these different things so that your portfolio is set up in a way that you're going to be able to handle that. So, you know, if you think longer term of what you want your portfolio to look like over the next 6 months, 12 months, and longer, things like this tend to be blips on the radar that we don't even remember later on. Again, you know, if I'm not bringing it up right now, the news media has not really been talking about the AI stuff from a week earlier anymore, because now it's on the tariffs. And next week it's going to be on to something else. So patience, kind of thinking through the long-term allocation that you want, really is going to be the most important thing here.
I'm kind of picturing you guys kind of glued to monitors. Did you see it dropped, and then did you very slowly see it come up?
Yeah, for sure. And, you know, one of the things from an investment perspective, especially these last two events happened over the course of the weekend, you know, we're coming in Monday morning already ready to sit down and talk as a group in terms of what's happening. People are already getting in front of what are the companies that could benefit or which are the companies that are going to struggle, because you start to look at this from a fundamental basis after that too. You know, how do margins, you know, compress or not? Are there certain companies that could take advantage of things as well too? But ultimately, you know, sometimes the market just needs to kind of smooth some of these things out and take that news in before, you know, you take the next step.
And I remember, you know, a similar case to this back during the first Trump presidency was at 2017, 2016. Where some of the same things were announced, and you know, people. I was getting calls, and people started going a little crazy, and we had to calm those fears down. And we look back at that, you know, that was just a really small blip, you know, in the radar. So we don't ever want to make, you know, rash decisions off of news that comes out, because you know the economy adjusts, you know, businesses adapt. All those things, you know, happen, and the most important thing for you, like you said, Matt, is to make sure that your portfolio is in a good place. So I think this is a good time if you're starting to have those worries to reevaluate your portfolio. And you know, there may be some opportunities. Your portfolio may not be allocated correctly, but that's how you prepare for it without making, you know, any type of rash decisions.
Did you get calls on Monday?
I came in on Monday and my email was loaded.
Yeah. And there's a beauty of an organization like Annex where you can get a hold of your wealth manager, that we have an in-house investment team. Next up on Ask Annex, can a trust be arranged that would disperse money to beneficiaries in staggered amounts, like every 5 years instead of one chunk?
Yeah, you know, the beauty of a trust is that you can set the parameters on how you want the funds distributed. The first thing you have to think about is what type of assets do you want to place in them? Do you want stocks? Do you want bonds, real estate, cash? Any of those things can go into a trust, and that affects how the disbursements work. So when you do have beneficiaries, I've ran into situations where maybe a parent, you know, didn't want their kid inheriting all the money, you know, because maybe, you know, at 18, think about it, you know, you get $1 million. It's really hard to handle that large lump sum. And the trust is a way to help the kid manage the funds responsibly. So you can kind of control it even if you're not here. Let's say you pass away, you've set a Spendthrift Trust in place. You have a trustee to manage the assets, and the trustee does have full authority on how to spend the trust funds. You know, the beneficiary, they can't sell it, they can't give it away. they're entitled to a certain portion every year, or however you set the terms of the trust. Now, the other side of that is, they do have limited access to that inheritance, so they can't just go in and grab it unless it's within the terms of the trust. So if you set these up right, they can be highly effective.
My wife and I did our estate planning about a year or so ago, and those are certain things that we put into place as well too. We've got 2 really little kids, and we want to make sure that they're set up the correct way. So we talked to who's going to be the trustee if something would happen to us, so they understand what we want and what we think is best for our kids at that point in time. But yeah, you want to put in some protections there to make sure you're right, that they're not 18 and all of a sudden they've got, what to them would be unlimited money. And I know what I was like at 18. I'm not sure if I would have handled that the right way.
Same here. Fred?
I got to add to the party. Yeah, definitely not.
Fred Coleman's a wealth manager and a CFP at Annex Wealth Management. Thanks.
Thanks, Danny.
Matt Morzy, Director of Research, also a CFP. Thanks.
Thank you.